afternoon and welcome to Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi Iwago. On the program, Bank of England eases rules for banks to meet challenges emerging out of the UK's referendum. The number of companies going public in China's inland and Hong Kong decreases in the first half of this year to 101. Plus, Rwanda turns methane gas into a lifeline by generating electricity to help businesses expand and light up the nation. We'll begin in the UK, where the Bank of England has eased rules for banks to meet challenges emerging out of UK's June 23 referendum to leave the European Union. Now, the Bank of England Chief Mark Kearney says steps are now being taken to ensure British banks keep lending and insurers do not dump corporate bonds. Part of the new rules was to reverse a decision taken last March by the Bank of England to increase the amount of capital banks must hold against cyclical upturns in credit cycle. The new capital buffer rule, now to be waived until June 2017, would reduce British banks' capital requirements by £5.7 billion, potentially freeing up an extra £150 billion for lending. UK's Finance Minister George Osborne says he plans to meet chief executives of Britain's biggest banks today as Bank of England Governor Kearney meets the press. And the shareholders in the London Stock Exchange have voted in favour of a planned merger with its German counterpart Deutsche Börse. The LSE chairman Donald Brydon thanked shareholders for their strong support after 98.9% backed the deal. The two stock exchanges agreed a $27 billion merger earlier this year, but the Brexit vote has raised questions about how it should be implemented. The LSE said the deal would still deliver value to shareholders. Meanwhile, German analysts are divided on where the European Union's financial centre will be located in a post-Brexit Europe, with some forecasting Frankfurt to become the continent's finance hub, while others expect London to retain its position. With a planned merger between the London Stock Exchange and the Deutsche Börse in Frankfurt still on the table, despite the United Kingdom voting to leave the EU, Deutsche Börse analyst Robert Halver believes most finance roles in London will move to Frankfurt, home of the European Central Bank. Others say the UK and EU should reconsider the Brexit situation altogether, given the uncertainty and loss that has followed the decision.
All of the British banks are not allowed to do, if the British go out, financial things they're allowed to do right now. They have to go to the continent place, financial market as Frankfurt, Paris, Dublin. And I guess they will choose Frankfurt because Frankfurt is just in the middle of Europe, and of course the ECB has a platform in Frankfurt.
The best solution would be for both sides to reconsider. I think for the UK, there is going to be a substantial loss if the trade links are hurt, if tariffs go up, and they won't get away without any loss, that's for sure, economic loss. And I think there are other reasons to rethink, and there has to be a new government. Maybe it would be a good idea to have an election.
Now let's cross over to Frankfurt Stock Exchange for more updates there. Conrad Boson, DWTV, Channels TV financial correspondent, is standing by to talk to me. Good afternoon, Conrad. Well, Bank of England has cut the capital requirements for British banks and ready for other Brexit measures. How is Frankfurt and other markets taking this statement?
I have to tell you, Jimmy, the stock market and stock trading here in Frankfurt and on most other Western European bourses is very nervous and heading lower again. The concerns about the potential consequences are rising again. And this also has to do with the remarks of the chief of the Bank of England today he gave in London. He did not only announce those measures meant to boost lending in the United Kingdom. He also said that there were obviously already signs in the UK that after the referendum major investment decisions had been delayed. Mark Carney, the Bank of England chief, also said that the current account deficit in the United Kingdom already before the referendum had been high, and it was likely to increase further now that the influx of capital in the United Kingdom was likely to slow down. These are things that made people concerned about the consequences of Brexit again, of course. The British pound slumped, which had to do with the announcement of the new sort of monetary policy measures that the Bank of England made today, and which of course triggered or fueled the speculation that soon the Bank of England will cut interest rates. Lower British pound, of course, helps some companies in the United Kingdom, but not companies which have a large domestic business. And of course, it doesn't really help companies here in the Eurozone.
Well, Conrad, looking behind you there, now I can see the graph tilting downwards, showing how nervous investors are really. Now, the shareholders in the London Stock Exchange Group have voted overwhelmingly for a merger with Deutsche Börse despite post-Brexit concerns. What is the position of shareholders and the Frankfurt Stock Exchange on this?
Well, first off, Jimmy, I have to tell you that those shareholders at the moment don't really talk to the press. So it's mostly rumors that I can tell you about. But the rumors are that many of those shareholders of Deutsche Börse are angry. They think that after the Brexit referendum and the following slump of the British pound and the following slump of the share price of the London Stock Exchange, the takeover offer which is on the table has become much less attractive for shareholders of Deutsche Börse. And that's why those shareholders are set to demand from the top executives of Deutsche Börse and also of the London Stock Exchange to sort of renegotiate, recalculate the deal, which of course is not happening at the moment. The shareholders of Deutsche Börse have until Tuesday next week to decide whether or not to say yes or no to the deal, and I guess we'll have to wait until next Tuesday until we know what's really on their minds. Until then, we will continuously have to speak about rumors, I'm afraid.
Sure, I guess there's a lot to talk about concerning that major plan there. Now, a new safer €50 bill is set to be released next year, and the European Central Bank is unveiling its look today. What's the talk about about this new €50 in the face of Brexit?
You know, the fact that today we know what the new €50 bill will look like, this sort of triggered a lot of talk about the euro here on the trading floor. At least I talked to a couple of people here, and they said to me, Brexit and the consequences of the referendum really has muffled somewhat all the concerns that people here in the Eurozone have about the euro. You know, people here, they like criticizing everything, and the euro has been criticized a lot since its existence. But now that people here are seeing, TV images with people in the streets of London rallying in favor of the European Union, it seems that this reminds people here in the Eurozone about what they have with the euro, a common currency for up to 340 million people in Europe. And despite all the political quarrels and the fights between our governments, this is a factor that unifies people here, and also a currency that gathers and gains more and more confidence all over the world. So the fact that we are going to see a new $50 bill next year is a positive piece of news.
Right, thank you very much for those updates, Conrad. Do have a wonderful day. Conrad Boulson, DWTV Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. We move on to Asia. The Australian stocks fell as the country's central bank kept interest rates on hold at its latest policy meeting. Now, the Reserve Bank of Australia held rates at the record low of 1.75%, saying the decision was prudent given the uncertainty over prospects for growth and inflation. Australia's S&P and ASX 200 shares index ended down 1%. And the rest of Asia, stock markets mostly fell following 5 consecutive days of gains. Japan's benchmark Nikkei 225 fell 0.7%, while the broader topics shared 0.4%. South Korea's Kospi ended 0.3 lower. Hong Kong's Hang Seng Index finished 1.5% lower. However, the Shanghai Composite bucked the downward trend and closed 0.6% higher at 3,006.39.